Let me ask you something. What if you could raise $14 million of private money without begging or chasing or convincing anyone? What if investors came to you because they trusted your process, your deal, and you? Well, that's exactly what today's guest, Glenn Yaney, has done. Glenn's the co founder and COO of Vertical Equity Partners. And he didn't start with money, connections, or a fancy background. He actually started as a server at Red Lobster. Now, fast forward, he's raised over $14 million in private money, built a portfolio of 650 units, and mastered the art of attracting capital like a magnet. Now, in this episode, Glenn's going to break it all down, the exact steps he used to raise private money, the words he's used to share it with potential lenders, how he found his very first private lender, and all of that good stuff. So, if you've ever wondered how to get people lining up to fund your deals, you're going to want to take some notes. Welcome to Raising Private Money, the only podcast for real estate investors who want to fund their deals without relying on banks, credit, or using their own cash. I'm Jay Conner, the Private Money Authority, and I'll show you how to get private lenders begging to fund your next deal, because every good deal starts with the money. You'll get to meet Glenn Yaney, my special guest, right after this. Well, hey there, Glenn. Welcome to the show.
Thanks so much for having me, Jay.
Yes, and I loved being on your podcast not long ago as well. And so, Glenn, I just love stories like yours because they prove that where you start doesn't have to dictate where you end up. You went from serving tables at Red Lobster to raising millions in private money. I mean, that's wild. Well, let's start there. So you started as a server at Red Lobster, no money, no real estate background that I know of. What was the turning point where you realized you could actually do this real estate business and even start raising millions in private money?
I mean, really, what I ended up doing is I started working for a REIT and just like immersed myself in real estate. Started on my days off, I would hang out with other real estate operators, and with those operators, I'd watch what they do, and I learned that those guys that were most successful are the ones that figured out how to buy real estate without the banks. Is really what happened.
Well, that makes a lot of sense. Well, before you ever raised a dollar of private money, what was your first step? In other words, what did you do to get in the game when you didn't have experience or the capital?
I mean, really, what it comes down to is learning how to pay yourself first. I mean, there's always money. Like for any bill I ever have, I've always learned how to pay it, but to pay myself first was the first step. But I, you know, where I think I went down, in my opinion, the wrong path was when I started putting money in my 401k, maxing out my IRAs, and really making myself illiquid. And I think whenever I had the mental switch that I needed to become more liquid and buy income producing assets is when I became financially independent, really in a short period. It took me about a year of refocusing on where I put my money. And yeah, it did turn out to where my first private loan was from a real estate investor that had a 3-unit mobile home park. And then I bought a 9-unit mobile home park from the same investor. Had very little money down, and it pretty much made me financially independent from just those two deals. And within a short period, I sold a house that I had as a rental. It really didn't make that much money. It was just like a primary residence that I moved out of. I sold it, had about $100,000 go into my bank account, and then I left my W-2 and started finding private capital to buy more real estate.
I love it. Okay. So you made the leap, you got in business, real estate investing, but that first private money deal, that's usually where everything starts to fall apart or changes. So let's talk about that. So, and you just mentioned your first private lender, but I want to dig into that a little bit more. Go back to your very first private money lender and deal. Do you recall how you found that first private lender, and how did some of the conversation go to where they agreed to be your private lender?
Yeah, so I don't know. I don't know if I had like a systematic way of finding this person, but I looked up to him. He had about 600 units of real estate, and I would follow him on my days off. And he was, getting to a point where he got very large. He ended up he's at about 1,600 mobile home pads now, and I made an offer on his 3 unit deal, and the only way that I could buy it is if he were to be a lender. That's really what happened.
I
I just
got
said,
you.
and then he just came up with the terms that he thought was good for him, and I agreed, and we just moved forward with the deal.
So when you were working on that first deal, he's going to fund your deal. Did you have any kind of fear inside that you needed to overcome to
Yes.
put that deal together? And what kind of mindset shift changed everything for you?
I mean, the mindset shift, it was very nerve wracking, because you start to realize that you're actually going to make a little bit of money other than your W 2. And it's for me, I studied real estate and investing and all this stuff for like 5 years before I even made any money. Like, it was just like, how do I come up with a down payment? And what I found is that the people that were successful were the ones that found the down payment outside of their own funds. It's like to to buy real estate with your own money is a slower pace, is what I would say. And if you have a high income, you can do it. But if you don't have, you would have to have an extremely high income to buy a lot of real estate. So the key is to use other people's money. Um, Once I bought the first deal, it really took the second deal it like made a switch where I was like no longer motivated by my W-2 job, and I decided that maybe I should put more effort into finding more of these deals. Is what happened.
Yes, yes. Well, and you mentioned the word down payment. In my world of private money for real estate, there is no down payment because I'm getting
Yeah.
all the funding from the private lender for the purchase. If there is a renovation involved, I'm getting all that money up front. And like you and I've talked about before, when I purchase the property, I always bring home a check from the closing table at purchase instead of having to bring a down payment on my own. And that's sort of a rule of thumb for me or a double checkpoint when I'm buying a property with all cash, private money, and there's a renovation involved. If I can't bring home a sizable check from that closing table, I'm paying too much for the property. That's just a nice little double check. So you got that first deal, you mentioned the second deal, and now as you start to scale your business, it's about building a system, something that is repeatable. So I want to dig into your process that you use now because raising $14 million in private money just does not happen by accident. So walk us through your process that you've used to scale and raise that amount of private money. How do you find, or how did you find potential private lenders to get that much funding? How did you approach them? How do conversations go? How do you close the deal? Just that overall envelope.
Yeah. So what I would say, the partners that have given me the 14 million have been investors. There's probably about 2 million of lenders, but I would say the majority of them have been investors. We figure out a structure that works best for them. And what I would say, the biggest part that I've had a mentor who's very successful. He has about 20,000 doors, and he told me, he says, if you have a good deal, you'll find the money. But I actually have found that that is not correct.
Thank you very much.
You find the deal, and then you're like looking like a desperate person holding your hand out. And what I have found is, and you and I talked about this, and is really you have to find the people with the money to get confidence to make the offers on the bigger deals. So then, we were buying, our deals we were funding around 500,000 at a time. Like our first big syndication, which was a 25 unit apartment, it was I think it was 700,000 that we raised, and the next deal was about 800, and then the next one was like 1 million. And what we're doing this whole time is we buy a deal and then we talk about it to other people, you know? So when you talk about it with other people, then you're showing that you have the experience of buying real estate. And then, you have to, what I would also add is consistent communication with my investors has been important to me. So I generally call them once a quarter at least to just check in, see how they're doing personally, and then generally they either have a referral or they'll have more money to invest, or they'll have questions about their investment, and then sometimes even in those conversations you question like are they upset or not upset, but then by the end of it you kind of know like where they're at, and you know what to do better in the future. So like if you have that question, it's like maybe it's somewhere to improve. So it's just constantly improving with communication. I like to have a good software as well to have a good forward-facing brand, to have people be able to log in, pull up their K1s or 1099s, and have a something. The easier it is for the investor, the more likely they are to give more money.
Sure, sure. Makes perfect sense. Now, what advice would you give to someone that doesn't have, a track record yet in real estate investing? What are some ways that they could build credibility so quickly, so potential private lenders might take them seriously?
I mean, so what I did is I aligned myself with people with more experience than me, and really what it started with was I would follow them, and then when I started raising capital, it was more of like introducing the capital person with the person I was following. So it turned into where it was kind of connecting them that way, and then what I continue to do is maintain those relationships, talk about the investment, because what I can tell you is that there's a limited amount of capital per person, of course. So they want to give you as much as they're comfortable with, of course. So, and also buying mobile home parks is like kind of like exciting. So like there's a part of it that they want to hear about, and from my side is they want to hear about the deal. Like they want to hear what they're doing. They don't want to go out there and knock on doors or post notices or talk to the contractors or deal with the septic tanks that we deal with. But at the same time, they want to know what is happening just because that's why they gave you the money. I think that there's some kind of interest in investing in real estate and they want to know what's happening. So I generally, talk about the investment and not be afraid to kind of give a little bit more than what you would be afraid of telling somebody. You're like, okay, well, is there something going wrong with the deal? Yeah, there's a little bit of that happening. We ended up finding a $40,000 septic tank at this property that we had to replace immediately, but we're taking care of it. It's working, we're working through it, and it'll be resolved within a couple months, and that's the reality of what was happening. It's, just giving details of the deal to let the investor feel a part of the journey as well.
I love it. Well, you've raised millions and millions in private money. What are some of the secrets or strategies that you've used that turns a one-time private lender into repeat lenders wanting to give you more money to invest and they want to keep, funding more deals?
Yeah, I would say consistency and being very honest, like not being afraid to. What I can tell you is if somebody tells me that that everything's okay and nothing ever goes wrong, it kind of puts up a meter, like where I'm like, there's something going wrong, and they're not telling me what the problem is. I think being communicating with them regularly and not daily, but at the same time when you do talk to them, just like, oh, this is what happens, and just communicating regularly. That's been the one thing. Explaining the vision still, always having the goal of like where you're going with it has been a big one. Even if the deal is kind of going sideways, which has happened, it says, okay, well, what did we buy this property for? We bought this piece of real estate in a good location. It's going to be good cash flow, and we're going to, we're going to continuously improve it over time. We're offering affordable housing, and what does that affordable housing do? It gives people clean, safe, functional places to live. And you're going back to the core reason of why you buy mobile home parks. Mobile home parks, yeah, they do have good cash flow, but they also have the portion of affordability. You're buying or what we buy is pretty rough assets, and we're bringing them back to life for people to live in safely and comfortably in a clean home. So that's our main objective.
Sure, sure. So, regarding mobile home parks, have you used private money to buy mobile home parks, or most of the time is it owner financing or seller financing with a carryback?
Yeah, I would say that if you're not going to be doing, unless you get to the larger mobile homes, but then it becomes very expensive, which we don't buy those. We buy the very smaller unit counts, 10 to 50 units. Private financing is the number one way to do it. You can't do it without private. I think we probably have about 20 million in loans, and I would say about 15 million of it is private lending. And the same story with those private lenders. The first lien lenders those are guys that write the bigger checks for us. They're very familiar with real estate. It's not like they just started showing up and wanting to give us the money. So we talk about our deals regularly, and we've had this one experience where a mobile home park. We finally got through it, but through Hurricane Helene, the mobile home park went 8 feet underwater for 3 weeks.
Oh, wow!
And didn't go back down, and terrible. It was. We'd have like a park manager, and I would tell her, "Did you go to the park today?" And she's like, "Oh, I went there yesterday, and it was still at the same level." I was like, "Well, then go there today to tell me that it's 6 inches lower." Like, just tell me something's happening different. And but we had to communicate with the lender. Like, it's not like we could tell the lender that the park was fine. It's underwater right now, so we're working through it, and paying the mortgage payments, and we're back to stabilize. We had it was down to zero revenue for 3 to 6 months, and now we're at 10,000 revenue. So that was something that had to happen. But communicating with the lender is how they continuously, they remember the time that you had a bad experience, continue to pay them, and you communicated with him. I didn't go in the dark. I didn't stop answering his phone calls. I was calling him to tell him, hey, this is what's going on. Send him an email, get some pictures of updates after the park, after the water receded. Even create good balance, financials to be able to show them. And I don't know if single family home has to be that detailed, but with something like this, it's something that it's like you have to shine when times are not as good. When times are not good, you're like, okay, well, let me show you how I'm going to handle this, because that's the question that every investor has, is what's going to happen when things are going sideways? Are you going to stand by taking care of the money, or are you going to run the other direction and leave them high and dry, or the opposite, underwater, 8 feet underwater.
Right.
So yeah, it was a learning experience, but you still have to communicate. The biggest thing is communication with your investors.
Yeah. Well, I couldn't agree more, particularly when it comes down to, the communication, keeping them informed as to what's going on. So you briefly mentioned it, but I'd like to dive into it a little bit. How is it that you structure your deals so that they are a win for your private lenders and profitable for you as well?
Yeah. So, I mean, for us, it could be numerous things. The way that I was able to leave my W-2 job, I came from a property management background. because I left Red Lobster and then I went into property management for 10 years. But what I ended up doing is creating a property management company to manage it. And then there's multiple ways of doing it, but for us there's fee structure, and it's really just being honest with like what the fees are. And you have to communicate that with your investors. It's not like a secret, because these are equity investors. Some of them are first lien investors, some of them are second lien. They don't care too much about the fees. But when it comes to limited partners, you have to kind of spell out what those fees are and not be afraid of them, because it's like if you have to be transparent. And also it's the reality. It's like, okay, so if there's a construction management fee, we charge about 7%. What's the budget on the construction management? And where does that cap off? So it's like, is it 100,000? Is it 500,000? Is that, and then that's how much I spend on the property. And I plan on managing $500,000 worth of construction, which is 7% of that. So that could be a way to manage the asset along the side. And when you explain it that way, they understand, like, if you're managing $500,000 worth of construction, it's not going to be a passive job. You have to have somebody out there to manage it. So that's how we we will make a little bit of money from limited partner investing. They also take the downside. There could be a stop of payments for if there's any kind of problems of the reserves go below the balance, or the idea of reserves where you want to be. But with those promissory note investors, those are the people that you pay no matter what. You don't really have to. You might give them a little bit of information. Those are more of like an annual report that I give them for the promissory note, because that's what they invested in. That's what they want. They don't want to hear about it. They don't want to hear about toilets. They don't. The promissory note investors are. It's a check. They'll let you know if they don't get paid on the 15th. They'll send you a message. Hey, I didn't get mine. And you forget to hit the send button on your software. So you have, oh my gosh. So you go back and you're like, I'm sorry, I missed the button. I've had that happen one time, and they let you know. But it's there's a different type of investor. First lien, don't really have to give too much information. Second lien, maybe like an annual report of what's going on, and then equity quarterly,
Well, Glenn, you have clearly figured this thing out. And as you mentioned,
no, I have not.
as you mentioned, it always hasn't been smooth sailing, right?
Yeah.
So let's pull out some lessons here that our listeners can actually use right now. So looking back, since you started raising private money until today, what are one or two of the biggest mistakes that you made early on when you started raising capital? Or what did you learn that you could do better?
Miscommunication. That's the biggest thing. I could tell you that the number one thing with all investors is communication. I could tell you that there was a time when we're in because of the mobile homes, we didn't understand that it's very hard to refinance a mobile home park with mobile homes on the balance sheet. You're trying to sell the mobile homes off. And we were told by a bank that it was better that we just buy the partners out to refinance, because we weren't big enough owners on the property. Mm-hmm. So instead of, like, the owners or the equity owners were like, well, why are you buying us out? Well, we didn't want to sell. It's like, well, the bank's telling us that we have to do this. And it's like, that wasn't the plan when we gave you the money, So it was like, so then you go back and you're trying to figure out the best way, and you're making yourself look bad because you told them that you're next to them, you're working hand in hand with the limited partner, and you benefit when they benefit. But now you're saying that you're going to buy them out, when it's like, we never communicated that that's what our plan was. If that's the plan, you should tell them that in the front end. Like, hey, my goal is to double your money or get you to this number, and then I plan on refinancing and paying you off. That would be the answer. And you have to tell them that. If you don't tell them that, then you're not communicating clearly. And that was my mistake on that, is like, that wasn't even our intention when we started, but we thought it was the answer, but we found that we have to sell the mobile homes to be able to get a good refinance, is really the short story. But
sure. Well, Glenn, if someone's listening and they want to raise their first $500,000, say in the next 90 days, what are their first action steps that they need to take right now to start attracting that private money?
I love your book that you wrote. I don't know what it's called, but I've read it.
Where to Get the Money Now.
Yeah, I've read that. And I would say that talking to people looking to invest, figuring out what they're looking for might be different than what you're looking for, is what I would say. And the other thing I would also add is don't make it complicated. You got to be straight. I have gone the route of complicated pitches, and when it's complicated and people don't understand, they don't want to give you the money. So it's very easy to say, with the good thing with debt is it's straightforward. How do you make it structured, and how is it safe for the investor? If you go into like a different level of misunderstanding that they don't understand, they're not going to give you the money, is really the answer. If they're confused, they're not doing it. Just don't expect it.
Confused mind does not take action.
Exactly.
Well, since you mentioned my book, for those listening, you can pick up a free copy of my book, Where to Get the Money Now. Just cover shipping and handling at www.jayconner.com/book. That's JAYCONNER.com/book. Well, Glenn, this has been pure gold. The experiences and stories you've been able to share. You've shown that raising private money is not about luck. It's about trust. It's about systems. And it's about doing the work. Glenn, thank you so much for breaking all this down. And how can people get in contact with you and continue the conversation with you?
I have two places. Where my podcast is the Millionaire Journey podcast. We have lots of real estate operators on there. They're usually a little bit higher than me level wise. So I like to find people that are doing more than me to learn from. That's why I get them on my podcast. And then I also am on LinkedIn, which is Glenn Yaney and LinkedIn.
Nice. Glenn, thank you so much, and God bless you.
All right. Thank you.
Well, folks, let's be real. Most investors think raising private money is about asking. But what I do and what Glenn has showed us, it's not about asking, it's about attracting, offering an opportunity instead of pitching. It's about building trust. And Glenn said it 100 times, communicating clearly, and creating deals that make sense for everyone involved. That's how you go from chasing money to having money chase you. Focus on getting the money lined up first. There's always going to be deals. So if you've been waiting for the right time to raise private money, stop waiting. Start applying what you just heard today, because the truth is, money is not the problem. In fact, there's more money than there is deals. It's belief and action that may be holding you back. Thank you for joining me here on the show, Raising Private Money with Jay Conner. I'm the Private Money Authority, and I really appreciate likes and shares. Think of one person in your world that this episode would make a difference for, and please share it with them. If you're listening on the iTunes platforms, etc., be sure to follow me. I look forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jayconner.com/moneyguide. That's JCONNER.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jayconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.
Great job, you guys.